following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, I started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love
right
it.
next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
It's such a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien and Steve Rhodes. My pleasure to be here. And, of course, they are 3,000 miles away from me. I'm in Newton, Mass. on the East Coast, Boston area. They are in San Francisco about to give another fantastic workshop. And that workshop's a 3-hour workshop right tonight in San Francisco. Just sign up and go. Extraordinarily successful, just the best of the best. In education, look at the front page of TFN. They'll be coming to the Boston area March the 3rd, Saturday, March the 3rd. It's my pleasure as part of the TFN team to be here. My name's Basil Chapman, and for 35, 40 years I've been hearing Basil. I've gotten used to it, but the name is really Basil. And what's even more important is not that I'm here, is that I'm sitting in. I've got 2 huge pairs of shoes to fill. I'll do my very best. Now, my service is the opening course. It's a very detailed report. This isn't a report. It is about 7 pages of notation, of charts, of many things. You can look at the Dow chart. The Chapman wave is the waveform that never sleeps. You can use all sorts of other techniques, but very often you have to wait for a level to be hit. With my technique, every wiggle, you could trade. Sometimes what I do is I trade intraday 1-minute charts up and down and up and down and up and down. You just keep going up and down and up and down. Not that it's always successful, but you can trade them up and down. Or you could just use a daily chart or a weekly chart or a monthly chart. So these techniques of the Chapman, which I'm going to show in a moment here in this particular hour, as I did in the previous hour when I was sub for Steve, I will show that just the concept. It's a unique concept that I found back in the 1980s, and I used to hand chart, and I found that when I got to the fourth peak, usually there was a very sharp pullback. And it evolved over a period of time, and at great expense, I might add. And eventually I got to this thing that I call the Chapman wave. It's an umbrella, the term Chapman wave, for at least 24 different techniques. Most of them, I call them proprietary techniques, but I give classes, master trader series, etc. So they're proprietary in that I discovered them. I'm sure maybe somebody else has done something like it, although I've never in all the 15 or 60, I don't know how many years I've been getting Stocks and Commodities magazine, ever seen anybody talk about grading each successive peak or each successive trough on the way down. And what I do is, you can see in my notes, these are uppercase letters, and you can see why I did not want my subscribers to be going short today unless at 12 o'clock certain things were happening. It could still happen, and we'll be prepared. On the other side of the coin, what I had also mentioned to subscribers is I followed the market. I've done a daily call on the Dow. Even when I'm away, if I'm in Europe, Australia, whatever it is, I do a daily call on the Dow, giving parameters, giving the specifics where we are in the Chapman wave, etc. So it's what I'm most comfortable with, but I always do the S&P and all the Qs and everything else. It's just the Dow is this is my thing. And if I had to show you, if I had to overlay charts of all the other indices going back to 1920, when I got charts of the Dow going back to 1920, you'll see that wherever the Dow is going, yeah, I know it's only 30 stocks. Hey, these are the biggest stocks. These are the most important the other indices will follow, even if it's a little late. So I do that. Now, what's most important to me is that the signal that I had with the doji of 13,005 on the 21st of February, that said that if with the MACD declining, it is not in a positive mode right now. But the stochastic, if you're looking at the charts, you'll see that the yellow and red lines over here, I can see it now on my little telephone. I always have it up so I can see that you are looking at what I'm looking at. You see that the yellow line crossed negative. That yellow line went under the red line. You see that the on-balance volume went peak A, B, C, D, E, corresponding exactly to the A, B, C, D of the Dow, which is really, I love that when that happens. That's how I use volume. Everybody has their own ways of using volume. And look what happened. Instead of being a sharp decline, which normally happens at a DOF, look at this peak F doji back on the 26th of January. You plunged down 300 points. And immediately, down day the next day, you open at the high of the day and you close near the low, make a Roman candle, you fill there, you make a wick, and you go all the way down to 12,529. I didn't see any of that yesterday. I saw the euro rallying. I spoke with Peter from Park City yesterday afternoon when I did Tom's show, and I spoke to him. I said, the euro should go to leg C because that's the characteristic of what we're looking at. So what happens? EUR, USD, the currency pair. Now, I really don't want to talk about this too much. Larry Pesavento is coming on in the next, not the next hour, but at noontime, Eastern time. Larry's the expert in the commodities, the currency pairs. I just track them. I just do what I do. And look what happened. 1.33290 was the high of the 9th of February. It pulls back, single leg down, two legs down to trough B at 1.2792. Let me just squeeze this close. And what happens? Overnight, we go to leg C. The moment you go 1 penny above that peak B, that starts leg C. It's called the floating letter. If there's a higher high tomorrow, I just move that letter over one more. It's called the floating letter. I'll be discussing that on my webinar, this is a free webinar. I don't think I've ever given a free webinar like this. This is the reason why I've got just so many, over the last couple of months, so many people who've started to get into the Chapman wave and are really enjoying it and learning, and it's additive to whatever other technique they have. I'm proud. I've spent my lifetime working on this. I've always been a teacher. I still actually teach music privately. I have some students. I love teaching. I love it because when you teach, you learn. You educate yourself. When you go back, I've been doing some work lately. I must say that the work that I've done over the last couple of weeks is probably has leapfrogged 2 years of work that I'd done before. And that's just my own knowledge. Whether I'm able to impart it is going to be another thing. But it's just a whole revelation. Certain things happen. It's just been very exciting. And that's the way it's got to be. I love learning. People say, geez, aren't you ever thinking of retiring or whatever? I love this. What would I do? I'd still be staring at the screen. So, yeah. So this is the euro. Look at the GCH, the gold contract. It's spiked above in a cup formation. Actually, I'm going to prefer to go to the GLD. I'm going to go to the GLD and I'm going to show something. This is the near-term daily. It's spiked up. That's the lowest low. So this is either A, or it's a continuation of a pattern here that could be the instant restart, and it could be a C. It could even be a G. I don't really know what the letter is. Just once in a while, there'll be a little confusion as to the letter. But there's nothing to think of here because it's very positive action. The next peak or trough is going to give you a great deal of that information. And then all you do is you go into other time frames. Well, the other time frame says, now look at this chart. This is the UUP, the Power Shares dollar bull, US dollar bull. I love the way, I've made fun of this for years. They call it the dollar bull, but it was once 120 and it went down to $20.84. So no, it's not the the dollar index went from 120 down to 80. So dollar bull, but it has been a kind of a bullish phase. But this is the problem. You see this long-term 2-year up channel in the GLD. This is the GLD Spider, a gold contract, gold's ETF that tracks at 1/10 the price of spot gold. It's been in a fantastic up channel. What happens with these up channels, and we've seen that in bonds, is that you can go along happily, in this case for over 2 years. Bonds have had 24-year bull market in an up channel. It's actually a 31-year bull market altogether. But in the channel itself, is that incredible? So now look at this. Gold spikes, goes out of the channel, goes to 185.85, the GLD, peak D. Even though there's nothing else here but the letters, you've got a peak E to the top back in December of 09, pull back. You've got a peak F in the Chapman wave in July of 2010, pulls back to July of 2000, in the same month, it pulls back to 113.08, goes to a peak A, B, and then a C1, CD. I'm going to explain that in my in the webinar. Pulls back and then continues the buy mode to D, E, and F to 153.61, just outside that up channel. Pulls back, goes into, you see the dashed line here? These are all techniques that I've developed over the years. That mid-channel dashed line becomes support. It breaks out of the inside track repellent zone right there, if you're looking at the charts. What does it do? It powers to 185.85 in peak D again. Plummets down to 155. I say plummets because it's a 30-point decline. That's a 30 point. It's about a let's see, it says 10. It's about an 18% pullback all the way to 155. Where? On the up channel support line. There are no MACDs or stochastics or 9-period moving averages. Right here, it's just the chart. And then what does it do? It breaks out, and I've been talking about this for a long time. I talked about this in two ways. I said you can either have the gold contract going in counterpoint to the dollar. The UUP essentially tracks the dollar. It's an ETF that tracks the dollar. Or occasionally they go in synchronicity. I have that chart somewhere here. I don't want to go to it. This is so important. I want to get to it right now. You see that the dollar, the peak that the UUP made at peak F top, and then a left side, right side price time match and broke down below from the high of 25.84 back in June of 2010, having come from 22.02, the November 2009 low, A, B, C, D, E, F, plunges down to a trough D, bounces up to an A minus, makes a pattern that I call the dreaded H. I'm not sure I'll be talking about these particular patterns in the webinar. There's really not enough time. I'm going to do just the core of counting the waves and what we can speak and how to count bars for these left side, right side time price matches. Then we make another series of declines. Trough A, trough B, lowercase on the downside, C, D, E at 20.84, makes another dreaded H with a successful test at 28.87. The H can go to an M pattern. That's on the CD, introducing the Chapman methodology. And then it fails at peak C to go to D in the time frame, which would have been this week. This is a weekly chart. Instead, the dollar's pulled back and gold has gone higher. Currency of fear. I'll be talking about more of this, and we'll go to John in Concord, still waiting patiently. I'm sorry, John, I forgot. And we'll talk about GPL, Great Panther, because it fits in right with the gold contract that I'm talking about. Be right back at 877-927-6648.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We're back. Basil Chapman sitting in for Tom and Steve. They're going to be in San Francisco. There's still time, I believe, to be able to go to the workshop for tonight. 3 hours of education and meeting these guys. I mean, what guys? What more could you want? And I'm here, and I'm sitting in, and I completely forgot about John waiting since the previous hour. Hi, John. We're back.
Yeah, no, I called you back, Basil.
Good. I appreciate that. I'm sorry that you had to wait. So you want to look at GPL, which is Great Panther. And Great Panther is, in fact, a silver company. We've had those fabulous Great Panther giveaways here. And Great Panther right now is at $2.68. That gave me time to redo. I've done it because what I had on my charts was when I was doing the show and I announced the winner, I typed in the winner's name. It's there. I've got it somewhere in my TradeStation library, but for some reason the wrong chart popped up, so it didn't have notation, but I've done it. The Great Panther monthly chart from the low of October of 2008 made a peak D in January of 2010, pulled back, went back above the 9-period exponential moving average and the 200-period moving average, and had this extraordinary spike from the 0.64 to the $5.04 level, March of 2011, and then it came down to trough C, and now this is leg A, but I call it a gray A. Did I change the color? Yep, it's called a gray A because it's a retracement back towards the upside. So it's not, I haven't got a confirmation yet of any buy signal or anything other than it's a nice strong leg A. I have a problem with a single leg A because sometimes they can fail. But look what happened in the weekly chart. Now, I always talk about moving averages just sitting there. You don't have to use them at all unless they come into your focus. Well, when a Great Panther went to this unusual peak G, it's called the right arm extension of the Chapman wave. It's a parabolic move on the 2 years ago. 1 year ago, to $5.04 in the weekly chart. It came down with 5 troughs, and it stopped with a doji right on the 200-period exponential moving average. It was so far away before you wouldn't have even cared about it. It was under the 9 EMA. Now it's above the 9 EMA and above the 200. I'm going to make a recommendation here. And now you think about what kind of portfolio you've got, etc. I would love for the stochastic not to be at 70%, but to be at 80%. And I wouldn't have had a single, in an eye blink, I would have said to you, grab a bunch here, add another on a dip to such and such, and you can even add more if it broke out. But because the stochastic, and it's a very important indicator to me, says that I have it sitting on the 9 EMA beautifully. Everything about it is fantastic. The MACD is good. I'm just not quite comfortable that I have the stochastic in the weekly chart at that 80% level, which is my security blanket. So this is what I'm going to say to you. Based on the action in leg A of the daily chart, there's just a really good chance that it is going to go back and retest the triple highs that it made at $2.80. So that's 11 cents. On a percentage basis, that's 5%. But it could be down 11 cents, and that's 5%. You take a loss. So this is how I'm going to, you have no position. I love the chart, the way it's acting right now. By the end of the day, I might say, oops, because it couldn't hold above the 200-period moving average. I'm going to make a recommendation. Start you got to know your own portfolio and how you want to handle this. My recommendation is based on the 120-minute chart, which is in leg D right now. I should have spoken to you before. You would have had that comfort factor because it was down at about 265. It just popped as we're talking to 269. Somebody's listening. Anyway, what I'm going to recommend, even though it's leg D, start a small position right now, realizing that your risk is, in the small position, either the small position just continues running all the way to 280 or 281, and you say, I should have had more. Or by the end of the day, it reverses and goes under the 9 EMA below 260. So that's a 70. That's a 10 cents. That's 11 cents risk. But I'm going to make the recommendation: start a little bit right here, add another one into your account. Just put it there. If it hits, it hits. But this is, I would say, good until cancel. But you better watch it because you don't want this thing to move to $3 and then one day it turns around and drops and you say, I forgot it. Good to cancel. I'm in at 259 or something. But I'm going to say add a little bit more underneath the 9 EMA, round about 259 to 257, somewhere around there. Just put in a bid, also a small amount. And here's the thing that I'm going to say to you. If there's a pullback in the next day or two and it doesn't get to your second position, but instead it breaks above today's high, add a tiny bit more. So you still only got 2 positions, but that'll be a trading position, and that position you want to see hit $2.80. And if it breaks above 280 cents, that weekly chart is going even higher. So I hope that helps you.
Thank you, Basil.
Thank you very much for calling. Basil Chapman sitting in for...
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Tom and Steve. Hey, it's my pleasure to be here. My service is the opening call, daily newsletter. I have my Traders Corner. We have longs and we have shorts. At this particular point, we don't have any shorts. I decided that I needed to wait the day out, or certain factors have to be, certain parameters have to be met to actually get on a short. And although this Boston weather, I must say, it could be going out in shorts, even playing tennis outdoors instead of indoors. So what we're looking at here is this. The Dow is up 19. The S&P is down 0.85. The fact that we've usurping, as I said to subscribers this morning, we're usurping time if in fact there's a bias to the upside rather than the downside, because this is the very moment that's, as callers were asking yesterday when I was doing the different shows, I said, this is your best reward to risk opportunity, not risk to reward. Reward to risk, because if you're correct, all you need to do is put a stop 1 penny above the Dow's recent high, the S&P's high, the Q's high, IWM's high, because this should work immediately. If it doesn't work, you know the finer points of what you're looking at. What it's saying is that there's a rotational correction going on. You're getting stocks like the Cake Factory, whatever it's called, CAKE, pulling back very sharply, having had terrific moves, and you've got other stocks that are breaking to the upside. And this is a very important time, because it means that money managers are able to sift through and still stay long some and be careful of others, but they don't have to go across the board, pull money out. So how we close today is going to be very important. Closing into the 12,880s or lower on the Dow, not good. Closing at 1347-ish on the S&P, not good. It says that maybe we're going to have a slow drip to the downside. But here I'm looking at the SLV contract. I need to follow through a couple of things. I know John's not on the line anymore, but I didn't give him the stops. I always give stops or buy stops on positions we're having. But first of all, the silver iShares Silver Trust, the 120-minute chart has made a series of buy modes. Look at this. Now, folks, I'm not doing anything here. This is just to show you how many times, just between this week alone, the 3 days, Monday, Tuesday, Wednesday, Thursday, just the few hours of trading that we've been here, I must have shown maybe 40 peak Ds in the different charts that we're looking at, where you had a pretty sharp pullback. Well, look at this. The silver contract from the doji low on the 29th at 11:30, the 29th of December, had a peak D, doji high, on the 200-period moving average in the 120-minute chart on the 12th of January, pulled back just a little bit, started a brand new one, went to peak D on the 23rd at 13:30 in the afternoon, pulled back, started a brand new one, went to D, and then just a real quick minor high of E, pulled back, E that was on the 2nd of Feb at 33.41, pulled back, and it had a really quick ABCD. When you have a quick ABCD, you've got to be prepared that you're going to be pulling back quickly. So this is 1, 2, 3, 4 buy modes. The buy mode is where you complete at least a D. Okay? So now look what happens. You pull back, you make a cup and ladle. This is called the Chapman wave cup and ladle pattern. What happens is you go from the left side to a significant right, to a significant low bar, which I have ways of looking at that. I often go to the low bar itself, or I go to a specific candle, a very specific candle, and that's what I teach in my Master Trader series, and that's the left side, right side price time match. And look what happens. When you break above it, instead of the cup and handle, which I hate those patterns, this goes right through the left side lip of 33.47. This is the iShares Silver Trust, 120-minute chart, and goes right to leg E. In leg E, if there's a diagonal, a trend line, it says that trend line comes in at about 34.22 to 34.34. The high today is 34.12. So there's a little bit of room, and then you can expect a pullback. That pullback, if it does not retest and go into the cup again below 33.47, is very powerful. If it does, then you've got to watch for the 33.36 9-period moving average. So we're close to some kind of a pullback. So when I go to GPL, which was the stock that we were looking at for John, what I would say is, John, the second position that you would get between 259 and 257, somewhere around there, if you're going to get it at all, that must have a real, I would say 5 cents, 3 cents. There's very little. It's got to pull back, hit that, bounce right off the 9-period moving average and start moving higher. And the core position, the little one that you started as we were talking, at about 269 or so, 267, 260, 270, that position, because it's a very small position, that can have a wider stop. You could even have that position as a stop below the second entry, and they could have a stop around about 255, 254, something like that. So you have to give it room, quite a bit of room, but that's the way I would be doing the trade. Now, if you miss the second entry, when you get the next one, the moment it crosses if it crosses 275, then you start making your stop very tight on the second position that you're going to add. Okay, so now I've gone through that. Now there's something else that I want you to talk about. In the chart patterns that we were looking at, that means that the dollar failed to go to a peak D, failed to get to the 23.52 high in the weekly chart. Hey, that's not good. And what's happening is that gold, the relationship of the inverse of gold to the dollar, is kind of working. But more importantly, I believe, and I believe this very strongly, that the dollar has had many rallies. You don't see it because I think that the administration, any administration, for years, I quoted back in December of 1928, 29. I'll have to check my numbers, where Roosevelt was sitting daily because his economic advisor refused to do it. He was sitting and he was fixing the price of gold every single day. He would sit there and say, okay, now it's going to be 1.25, whatever it was. And what was he doing? He was really trying to make the dollar strong. He was trying to weaken the dollar. So he was trying to fix the price of gold. So they've been doing it for forever. So I think that the administration wants a lower dollar. That's why the dollar it's wheel spinning. It is trying to rally, but it's just a wheel. I'm rolling my fingers here. So that's why it hasn't broken into the UUP is not broken to the 24s. It should be in the 24s, and gold should be pulling back. But gold is the currency of fear. And this is very good action that says there's a good chance that if the GLD breaks 175.46, the high of the week of 11/11/11, it's going to go by April the 13th. You got a left side, right side price time match to the 185s. So this is critical. If by Friday afternoon, tomorrow afternoon, there's a sudden reversal, there's still tremendous support in the GLD in the 166 to 165 area. So that's really interesting. Now look at this chart. This is yields. Same thing. ABCDE, 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 and the 30-year yield. That's the T and X. Nope, that's the TYX, and it stops at 48.43. Week of the this is a weekly chart. Week of the 12th of June 2009 stops at 48.58. A peak E. The week of the 9th of April 2010, 48.39 peak E. The week of 11th of February of 2011 plunges down to 26.94. Now, this is really important. The TLT right now is at 116.20, down 54. Had a good day yesterday. And all that could happen was the market was just down a little bit. I think this is very important. If that HGX, I can't remember, was it this session or Steve's session that I did the HGX? If the HGX, the Philadelphia Housing Sector Index, if that holds well here, and it could, because it made a peak F top. It's pulled back. The huge candle of the 3rd of February where we spiked from 118 to 123.99. The body of the candle is still holding well. It hasn't gone to the bottom. And this is peak C. If there's no new high this week, which I'm absolutely sure there won't be, there's a doji high at 125.01. I just don't see from 120.37 we're going to go there by tomorrow at 4 o'clock. That says there's a good chance that there's a bit of a pullback going on. 116 is really key to this Philadelphia index support, and the 114.28 is very strong for the weekly 200 period exponential moving average. And look here, once again, look how wonderful and important these moving you don't have to do much with them, just keep them there. Learn how to use them. Look, the Philadelphia Housing Index broke down. Can I find when it broke down? Yep, there it is. I'm getting there. I'm back in 2008, 2007. There you are. The last time that the HGX, the Philadelphia Housing Sector Index, dollar HGX is the way it's up $1.07 at 120.38 right now. The last time it was at the 200 period exponential moving average was July of 2007. The weekly chart had made a peak F top just before that at 257. The monthly made a peak. Folks, remember, we were on air when this happened. At 293, I said there's a peak F holding the 9-period moving average. It broke below it in October of 2005. So this is a fascinating thing. 2005, this is already 7 years of a bear market in real estate, just working its way up now. And at that time, I said, when this cracks, this is going to be a 10, maybe even a 15 or 20-year bear market in real estate. We'll see. The jury's out on that. I still, as a sexy thing, a fad, I think it's over. as a speculation, if you are in the business, that's completely different altogether. It's just two separate things entirely. But if you're buying real estate now thinking that you're going to make a killing, my opinion is killing could be the operative word. I would not be doing it unless there's cash flow and you really understand the business. That's completely separate. So this HGX index is really important. Why? Because if it's making some kind of a low in this area, even if it drops a little bit more, but it is only just pulling back, consolidating the huge gains that it's had from the low of October of just last year, 73.65 to 125. Come on, that's a huge. That's what is it? It's about an 88% gain. That is a huge gain. It needs a little time to pull back. I hope it's just a little pullback. That to me would be very important. Single leg A up in the monthly chart. Now this is very important as far as I'm concerned. The S&P Select Financials. I talked about this last night. I went through it and I showed it in the chart that I believe I have. No, it's not here. All right, the chart that I just had showing the naked chart, as I call it. And what I'd said is there's a chance that there's another pattern. It's the oval pattern. And I might be talking about that. I don't know if it comes into the context of what we're doing on next Wednesday night at my webinar, my live free webinar. I'll talk about that. I usually talk about whatever is in front of me. There are no rules barred. I just do it. So this is an oval formation. And that could be very powerful because the MACD and stochastic in the S&P, the XLF, at 14.60 upper penny right now. That's really important because if at a peak F there is a consolidation, rather than a complete pullback, because the candle of yesterday was what you see after a peak F, the candle today should be very ugly by the end of the day. It should be red. You should be tackling the wick of the candle of the 16th down at 1439. There's time to do that. I'm just saying that's kind of bear market material. And then what would happen, the simple moving average, 200 simple moving average at a quick peak C, leg C in the weekly chart still has 94% in the stochastic. MACD is still expanding. To me, that is really positive. So it's going to take the XLF to plunge down to 1386, the 200-period exponential moving average over the next week or two, to really knock the socks off this stochastic in the weekly chart, because that'll drag it down probably to about 83. But then you will start to see the MACD fast moving average turning down. It might be underneath the 9-period moving average as it breaks under 14.19. I'm watching this closely. I'm impressed. I think this is fantastic action right now in the XLF. That to me is important. So I have time to. I'm going to say to the Dan, give me some stocks that you want to look at, because I only want to look now at the HGX, the copper contract, which made a doji high yesterday. It's pulling back. Very important that the key support of 3.7635, it's a 7815, that holds. But you've had a very nice move up in the weekly. It's made a peak C. It's pulling back to the 200-period moving average there, as well as the 9-period moving average. If copper breaks and closes in the next week below 3.6934, that is a different kettle of fish altogether. That would say it's starting to fail. At this point, it's holding very nicely. So we've got a break coming up. We've got, let's see. So I need to look at the IYT, and we'll look at some other things when we get back. Basil Chapman sitting in for Tom and Steve. This is the Money Show. No, the Money something. I'll be back straight after these messages.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Stay tuned for Kate Stalter. Just a fabulous show on small caps. She just does tremendous work. It is really worthwhile hearing. And, of course, Larry Pesavento straight after her. This is a great day of shows. Ken Shreve, I'm not sure if Ken's here, but Ken will be here, should be here this afternoon at 3, and then this afternoon 4 o'clock till 6. I'm not sure who's doing Tom's show, but 4 o'clock till 6 will be what's normally Tom's show. Now, I had a couple of questions. Drys, D-R-Y-S. Now, this made a peak. Ian the Chapman wave held the 200-period moving average. It hit it exactly today, right on the button. 307 is the number. It went to 309. Missed it by 2 cents, sorry. And it's springing back. I love this, and it's telling me about the economy. Like, if the dry ships are doing well, this is a carrier of dry commodities. That's really important. So I do like it. If you're long, the moment it breaks, if it does break above 384, that weekly chart will be very good because it will signal that there's a chance of getting 386 would be the level I'd be looking at. 386 in that whole area of 420. So if it If it fails, that 307.3 will be very critical support. Next thing was HUN, and then I want to go to the New York Stock Exchange before we run out of time. So this is HUN is Huntsman. What is it called? Huntsman Company Core. I don't know what the heck they do. They made a low, a doji low in the February of 2009 at 203. Went to a peak E at 21.52. Pulled back to $8.13. Monthly chart is now above the 9-period moving average, and that's really important. Now look at this. The weekly chart stopped right at the 200-period moving average. It looks just like the silver chart. It's just squeaked to another high. It's in leg C. Now, what's really important about this is the stochastic and MACD are doing well. This is what I'm going to recommend. I don't know if you're long or you're short, what you're wanting to do. I would not short it, but it did make a spike to a leg F. It's like the technicals were going down. This is a good short, but it spiked up to a new recovery high 5 days ago. Now I think you've got to look at it as if it's in a rectangle formation. If it starts to break down, the most important thing is it has to hold the low of $12.65. If it cracks that, then it's going to go all the way down to the doji low of 12.20. So far, I think it's just going to be in a rectangle formation. That's what that candle is, like a flagpole says to me. Now, let's go through it. So I hope that helps. And what you want is for it to break and close decisively above $14.18. If it hits $14.28, $14.33, and closes there, I'd say that could be a brand new buy mode. So far it's acting very well. Recovery in the monthly chart has to break and make the magnet of the 200-period moving average a propellant to the upside. Dow's up 43, S&P's up 252. That's why I didn't want to go short. Let me explain another reason why. Day's young. Anything can happen. But look at the way the New York Stock Exchange has been walking, literally walking, the 9-period exponential moving average. MACD pulls back. Stochastics at 88%, very strong, but the fast moving average did pull back. Price refused to recognize it. I have used this technical indicator, the 9 EMA, for so many years and on so many thousands of charts. I have respect for it. If the NYA closes underneath for 2 out of 3 sessions, be careful, because then the low of 79.64 of the 10th of February will be vulnerable. If it closes nicely above the recent high of 81.50, goes to 81.53 in the next 2 days, that is really positive action. And that's why I think we're just about to wrap up now. So let me just review. I've shown you time and time again the peak A, B, C, D. It can go higher. The point is to be able to learn. I know people who have for years used the Chapman wave just for leg C to D, and then they're out. C to D out, C to D out. They A, B, C, D, that's what they do. You can use it anyway. My webinar on Wednesday, the 29th of March, at 6:30 to 8 Eastern Time will be free, but you must sign up at TFNN. I think you're going to learn an incredible amount to be able to add to all your technical indicators. Stay tuned for Kate. I'll be back tomorrow morning. Tomorrow morning. And have a great day. And, the turkey's gone.